Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 10th of November 2018, and we're providing our gold and silver weekly update for the week ending the 9th of November. Gold fell $23 last week, from $1,232 to $1,209, having hit a high of $1,235 and a low of $1,207. In sterling terms, gold finished the week at £932. That's down £18. And in euros, it closed at €1,067. That's down €15 on the week. Silver fell 59 cents, from $14.75 to $14.12, having hit a high of $14.77 and a low of $14.12. In sterling terms, it closed at £10.92. That's down 46 pence. And in euros, it closed at 12.49 euros. That's down 0.46 euros. The gold to silver ratio rose more than 2 points, from 83.52 to 1 to 85.62 to 1. The Dow Jones closed on Friday at 25,989, down 201 points on the day, but up 719 points on the week. And the NASDAQ closed at 7,406, down 123 points on the day, but up 50 points on the week. And the S&P 500 closed at 2,781, down 25 points on the day, but up 58 points on the week. Brent crude fell $2.65, from $72.83 to $70.18, and US light crude fell $2.95. Well, last week, our comments on gold were, quote, "A number of traders are expecting gold to hit $1,250 this week, and indeed it is quite possible, though once again, one must not ignore what may prove to be an even stronger dollar depending on the election outcome." Well, to be frank, gold did not get there. Just shy of $1,236 was as far as it could reach. And boy, did it take a hit towards the end of the week, and particularly on Friday. We had the perfect storm to attack gold. The election results, although poor for the president, were not as bad as they could have been, and frankly, were a little better than some of the blue wave theorists advocated. The FOMC's report on Thursday did little to dispel the prospect of an interest rate rise in December, and the producer price index reported on Friday rose a considerable 0.6% in October, following a smaller than expected gain of 0.2% in September and an expected 0.3% for October. So it was twice as much as expected. This has meant that producer prices have increased 2.9% over the year. Now, when you compare this with last Friday's report that wages have risen by 3.1% and the unemployment rate has fallen to a 50-year low of 3.7%, the Fed is certainly watching in case it foresees an overheated economy. We have said many times it is essential for the Fed to get rates up to 3% and preferably 3.5% by 2020. It needs to be armed with an interest rate reduction weapon when the markets eventually turns. And this week's figures just provides further ammunition to justify a December rate rise. The effect of all of this is to push the US dollar even higher, and especially against the euro. Please note, we cautioned a few weeks ago to watch this relationship. With the dollar index now at 96.90, and some economists, not the most, but some, predicting that it may indeed eventually reach 100 again within the next 6 to 9 months. So we can see why gold fell so dramatically on Friday. From a technical point of view, gold prices have moved near the 50-day moving average. If it falls below this $1,209 level, and we believe that it will, then sub $1,200 is again back with us, with the September 1184 lows being tested. Though we will admit that the $1,200 level has proven to be a strong support zone, but we suspect that it may not hold for long, especially if the dollar increases its upward trend. Silver prices were in the doldrums virtually all week, and like gold, fell significantly on Friday. Technical traders and chartists have once again turned negative on silver and believe that should it fall below $14, then $13 will be tested and then $12. We have expressed some doubt about $12 silver, but certainly could foresee $13 to $13.50, and perhaps this is what is about to come to pass. We shall see how markets react next week. Again, the COT report shows producer merchants and swap dealers increasing their short positions and managed money decreasing both their long and short positions. However, in view of the fact these figures fail to take account of the election results and the economic data published later in the week, we will be more interested in next week's report, to be fair. A little tongue-in-cheek, we were considering purchasing our silver top-up of the 2018 coins we haven't purchased this year so far. But we heard David Morgan say at the Cambridge House seminar that he believed the bottom was in for silver, and so we delayed. Looks like a good decision. Sorry, David, we are a little cruel to you, but you have got your metal prices so wrong so many times. You are now fast becoming a fundamental characteristic and barometer in our predictive forecasting. But don't worry, you will be right one day, and then we shall all worship you as the true silver guru once again. So let's take a look at the economic news to be announced this coming week. Well, stock and bond markets are closed on Monday because of Veterans Day. On Tuesday, we have the federal budget figures for October. On Wednesday, the Consumer Price Index and core CPI for October. Watch that one. That's probably the most influential for the week. On Thursday, retail sales and the import price index for October. And on Friday, industrial production figures for October. So next week shall prove interesting. Friday took quite a fall, and there may be a little recovery on Tuesday. However, just notice how the Dow has recovered a fair amount of lost ground, how the dollar index has risen. Most commodities, including oil, have fallen, and the Fed is almost certain to raise rates in December. Now, we fully accept that a lot has already been factored in, but the general consensus is, quite frankly, an even stronger dollar, which is why you will notice the pumpers coming out in almost full force, stating that we're on the verge of collapse. The psychology is obvious. The stronger the dollar becomes, the more likely it will fall again. These guys are hoping you will forget the past 8 years when they have made this collapse prediction and the dollar has strengthened. Finally, we also wish to mention the Inner Sanctum and thank everyone who has joined either as a free, bronze or silver member. If you haven't joined so far, please do so, as we do plan to communicate by email periodically and can only do so under current legislation if you have signed up and ticked the box accepting future emails. The web address, of course, is www.illuminatisilver.com. This week, we are adding a new message board to the website where you can see messages and alerts. But you must be a signed-in member that is free, bronze or silver to see it. The Facebook group is also launching on Friday. Again, we shall place the details on the message board and forum. And our forum will have a little makeover so it appears more user-friendly. If you haven't used it so far, please do so. Greg is very active on the forum and it welcomes any comments or questions. Meanwhile, we wish you a great weekend. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and pressed the bell sign so that you are notified of any future videos. Kindly visit our new website at illuminatisilver.com, and if you haven't already done so, please subscribe as either a free or paid member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.